Hey everybody, what's up? It is Wednesday, May 25th. Let's talk about what's going on. So we had, I think, another pretty constructive day. We're very close, I think, technically, and I look mostly at the fundamentals, I look at the fiscal picture. But if you want to talk technicals, just a chart pattern reading, I think we're very close to a breakout to the upside. And I've sent out an email to my subscribers today giving levels. NASDAQ, S&P, Dow Jones. Let's talk about today, because I think today was another one of these instructive days from the standpoint of market behavior, trading pattern. Now, I mentioned this yesterday, how the selling has now been rebuffed. It's been repulsed. And I said yesterday that, or a video a couple of days ago, stronger hands are moving into the market on the buy side because they do see there is value here now. I think yesterday I mentioned that, a lot of the smart money sees value. They're just many of them are still concerned with Fed policy and inflation. But there is a shift going on. And that shift is evident to me in the way the market is trading, where today is a good example. We had the FOMC minutes came out. That's the minutes of the last meeting, came out at 2 p.m. Eastern time. The market was basically up. The minutes came out. Everybody freaked out because there was, it was a hawkish tone to the comments in there. Multiple 50 basis point increases over the next several meetings, and we instantly went negative. But as this pattern has shifted over the last few days, and this is really coincident with the positive liquidity flows, positive fiscal flows that I've been talking about, which really became a feature around May 16th, after May 16th. Positive liquidity flows, government running a net deficit for the month, the leading spending flows, as I've been mentioning here, they're very strong. But this pattern of repulsing the selling impulse. Okay, we saw it again today on the FOMC minutes, and that's a good sign. I mean, that yesterday I said we got to be like detectives and look for evidence sometimes in market behavior. If you're trader oriented, you got to look for evidence in market behavior where a pattern that had or has existed in the past no longer exists, or that pattern has flipped around. And I think we're seeing this now in the way, because a couple of weeks ago, not even a couple of weeks ago, probably like a week ago, all right, that FOMC release of the minutes with a hawkish tone, a sharply hawkish tone in the minutes, we would have had another one of these 1,000-point down days. And the market got hit initially, and then it bounced back and it closed strong. This is a good sign, and again, I'll say I think it reflects, or it's coincident with the strong, or the reversal in liquidity flows. Again, we went from a 332 billion surplus in April, and then that surplus carried into basically until like the 13th of May, and then it flipped back into deficit. And that deficit, again, to explain it one more time for the umpteenth time, that is a net addition to the financial balances of the non-government. That's us, that's the economy. So the pump is pumping in, the swimming pool, the hole at the bottom of the swimming pool has been patched up, the water level is coming up. That's a good sign. And it's funny because I sent out an email right after that FOMC reaction, and I said, wait now for a revisionist spin on the narrative. What do I mean by that? Well, the spin has been We're in a bear market. We have inflation. The Fed is going to raise interest rates. Monetary policy is really bearish. We're going to have QT coming up, in a couple of days. All this stuff. Heavy negativity, heavy bearishness. Of course, a lot of this was based on really ignorance. I'm not going to go over that again. I mean, this whole psychotic fixation on monetary policy at the exclusion of everything. Everything is about the central bank. Everything is about interest rates. Anyway, I said, it's funny because I said, now just wait for them to revise the spin. What do I mean by that? Everything there, if they see the market going up, and in their minds it shouldn't be going up because, in their understanding, in their frame of reality, things are still really, really negative. You have inflation, you have monetary policy, you have the Fed raising interest rates, yada, 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 all that stuff. But if the market goes up, they have to come up with a reason for that. That's the spin. And if it's going up when in their reality it should be going down, they got to revise that spin. They got to come up with some rationalization as to why this is happening. Okay? Otherwise, it's, like a big time cognitive dissonance. They're just like their minds are short-circuiting. Their brains are short-circuiting. So they got to come up. So it's funny because the first headlines that I saw from after the FOMC, and these outlets, these media outlets, they try to put these headlines out really quick to beat everybody. And I don't know, frankly, I don't know how they do it sometimes. They must have people on staff who can write very, very quickly and come up with a rationale. So the first thing I saw when the market went down was like, oh yeah, you see, they said they're going to raise 50 basis points for the next 3 meetings. It's very hawkish. So right away they jumped on that. And then what happened? The market went up. And then all of a sudden, just like I said in my email to my subscribers, wait for the revised spin. Boom! The revised spin came out. And that revised spin was, oh, well, the Fed also said that, inflation was going to come down to 2.5% in 2023. And 2.1% in 2024. And at the end of this year, 2022, it'll be like 4.1%. So they're seeing it's trending down because the Fed, of course, it mentioned that these supply constraints and these special conditions that have been creating a lot of these price pressures, they're going to abate. And then all of a sudden the spin became, oh, so it's only going to be 3 more rate hikes, 50 basis points each, and then we're done. See, they have to rationalize it somehow, and they always have to rationalize it in the context of what the central bank, is going to do. It's never about, hey, you know what? We've had 4 months of 600 billion plus spending. That's huge. We just went from a massive liquidity drain related to tax filings to now, we're back in a normal situation of deficit spending, and that's liquidity injection. No, none of that. That stuff is just like, it's not even that it's ignored. I mean, they don't even understand it. They don't understand it. It's one thing if it was ignored, then you could say there was like some dark ulterior motive. They just don't want to acknowledge that because they need to be talking about the central bank for some particular reason. But no, it's not Machiavellian or sinister like that at all. It's really pure, sheer ignorance. For them, it's just like, it's not even something they consider. It's a meaningless thing for them in their world. And when I say them, we're really talking about the whole entire, financial industry and investors in general, and the media that covers investing. For them, it's all about monetary policy, and it is always about monetary policy. All right? So they have to rationalize it within that context. They have to come up with a reason And for them, there always has to be a reason. Every time something happens, it could be total noise. You know, I spoke about this back with the Trump tariff whole thing we went through. Every day, one day up, one day down, one day up, one day down. And you know, they had to come up, they had to concoct a new reason, a new rationalization every single day. It wasn't like, okay, sometimes it's just technical. Sometimes there's a, look, I was a floor trader for many, many years. And I can remember times when somebody had a big position in the market and just, you know, for whatever reason, they had to get out. And that moved things. But it had no, you know, no correlation or no importance with respect to the broad conditions, like what was really going on. It was a technical thing. You know, a stop was hit or somebody came into the market because they were hedging something in the cash market. I mean, you know, you can't always expect that there's going to be, yes, you can expect to have an explanation, but the explanation 9 times out of 10, especially when you're talking about really short-term moves day to day, the explanation is not connected to the big picture. It has to do with something technical. Somebody moving into the market, somebody getting stopped out of the market, somebody getting squeezed, somebody trying to put on a squeeze. So this is what they do. And I laugh because, you know, no sooner than I sent out that email to my subscribers where I told them, get ready for the revised spin. Boom, there it was. Right on cue, the revised spin. Oh, it's going up now because, you know, inflation is going to start to ease. And that's not new information. I'm sorry. Like, everybody knew or should have known that eventually the pandemic-related supply chain issues were going to, you know, they were going to end. They were going to abate. They were going to dissipate. And things would get back to normal. But, you know, look, what can I tell you, man? I'm trying to, you know, impart some wisdom to you here. I'm trying to keep you from being emotional. I'm trying to help you understand, you know, that a lot of this stuff is just ignorance. It's emotion. You got to be able to step back from that. Look, I know it's hard. You know, in this recent period with the market crashing down and you know, a lot of it I feel was just driven by pure emotion and lack of understanding. Ignorance. That's it. I mean, again, we're coming up to this QT, and I'll pose this to you right now. I mean, if the Fed starts QT, which is, you know, universally considered like super bearish for the market. I mean, you will not find anyone other than myself who will tell you that it's actually a bullish thing. I mean, if you're gonna, you know, if QT reduces reserve assets, then it actually improves the leverage ratio of banks. You know, it makes, in other words, to say that it makes their capital more impactful now. They have less assets, and so they're able to lend more. I mean, so the bank stocks should do very, very well. I'm the only one telling you this, but here's what I'm saying right now. If the Fed, when the Fed embarks on QT, which it will be doing very soon in June, and if the market goes up, again, they're going to have to invent an excuse, a reason, a rationalization for that. And believe me when I tell you this, that rationalization is absolutely going to have nothing to do with the real reason of why it's going up, which is the fact that QT, that reserve drain, is actually good. Look, I mean, banks are shunting off deposits now into the reverse repo facility. They don't need that. They don't want that. So, but nobody's going to tell you that. They're going to say, oh, it's because the Fed is now, leaning more dovish, or, inflation is starting to, they'll find some reason attached to their reality that fits into their reality, their understanding, anyway, their understanding of their reality. Does it matter? I mean, it only matters if you want to be informed and educated. It matters if you want to make money from it. And that's it, I guess that's why we're all here. So the other thing I saw today is we're starting to see a shift in put call volume. Today we definitely saw a flip into more volume on the call side. I think this is another indication of what I've been talking about, that the smart hands quietly moving into the long side, and this is one of the reasons why we're seeing these sell-offs rebuffed and repulsed, because there's buying under there, and now the liquidity is there to buy. And again, I'll say it, this is the real liquidity. This is not the fake QE, which is just a asset swap. This is real money. This is net government spending. That's money in people's pockets, money in firms' pockets. So that's what's going on. Anyway, it was a good day. Technically, we're on the verge of an upside breakout. I've been telling you this. And that's it for today, folks. Bye.